Good evening and welcome back to Be Rich. The global bond market is sending jitters and is also feeling jitters. And why is the bond market most important to us? Is because the bond market tells us, like a canary singing in a coal mine, whether there is enough oxygen left in the tank or whether things will implode. Bond market is a place where the governments of the world borrow money, and depending on the interest rate at which they pay, then you can decide how confident that the bond players are about the government and their ability to repay. For long, over the last 40 years in Japan, what has happened is that the Japanese housewives and the Japanese central bank was continuing to buy bonds, and interest rates were flat or near zero. Whatever happened, inflation never came to Japan, and people of Japan were not willing to take any risk, keeping the money stuffed in their pillowcases or willing to buy 0% bonds. COVID seems to have changed everything, and then inflation came back to Japan. When inflation came, everything in Japan flipped over. A lot of corporate laws had been passed over the period of time to make corporate governance more transparent in Japan. Also, about 3 years back, Buffett flew to Japan and made an investment in three Japanese conglomerates and later decided to take 9.9% stake in each of them. The Japanese market revived and has grown from there. Suddenly, the world discovered that the Japanese stock market is very cheap and money has piled onto the Japanese markets. As the Nikkei broke its 40-year 1989 high finally early this year and crossed 40,000. After some time, it crossed 43,000 and then took a break. And last week rallied past 44,000. Even at 44,000, the P by E ratio of most Japanese companies are very reasonable. If my estimate is right, it must be the index itself must be around 17 times PE. But most heartening thing for me for Japan is that the bond yields have started to rise, which means people have started to demand interest for the money they have parked. So the Japanese government has finally woken up and managed to push through a yield, a hike. At this point of time, the Japanese central bank has said that this year there might be a hike of interest rate. That is, interest rates will go from 0.25 to zero point 0.5 in spite of the political turmoil. The Japanese Prime Minister was forced to resign. A new government has to be formed, and a new Japanese Prime Minister has to be found. In spite of such turmoil, the market in the Japanese stock market is continuing to climb. Why is the Japanese market going to climb? Why is the Japanese market climbing? The Japanese central banker and the Japanese technocrats seem to have got a measure of Trump. From where Trump was bellowing that tariffs will destroy Japan, these people have managed to get Japan a very favorable deal of 15% and no tariff on tariff. Wherever tariffs are higher than 15%, they have been brought down to 15%. Wherever tariffs are less than 15%, they have been pushed to 15%. Japanese car makers, which are dependent on America, are relieved. Whereas the US motor from Detroit, Chrysler, which is now Stellantis because of Fiat, General Motors, and Ford are howling because whatever the protection they were promised, they have not got. And their auto parts are at a higher duty, and they then find themselves in a position not competitive with Japan. So the Japanese car makers are on a song. The Japanese economy is on a song. Its biggest trade partner has agreed to a relatively low tariff when compared to the rest of the world at 15%. The Indian Prime Minister has landed in Japan and is willing to take Japanese help for pushing through infrastructure. He has asked Japanese companies to invest in India, and there is also talk that Japanese premier brand Toyota will be the sponsor of the Indian team. All this means that Japan as a society and as a country is definitely doing better, and there seems to be hope in Japan after a long period of 40 years. Though the Japanese currency is still weak, and if the interest rates come through, yen will start to rally against the dollar because in the coming year, America is expected to cut interest rates while Japan is supposed to increase interest rates. The narrowing of interest rates between Japan and America will mean that the yen will get costlier vis-a-vis the dollar. But they had allowed the Japanese yen to depreciate for a long period of time, and therefore any increase in the yen should not pose a problem for Japanese exports. So it does look like a good comeback for Japan after the 1980s. To make things come full circle, the Japanese company SoftBank has committed to invest $2 billion in Intel and will work with Intel to resuscitate its artificial intelligence division. So Moshi San has also invested heavily in Intel. What all this shows is the Japanese have got the measure of Trump. They have worked as a team. The businessmen, the technocrats, and the politicians have worked together and put together a strategy and which has charmed Trump into signing an agreement. Not only verbally, that agreement was the first agreement set in stone and formalized. Now this is done. The Japanese companies can get along to do their business. Along the way, it is also very clear that the Japanese have not made significant concessions in importing beef and importing rice, which are the two red lines that the Japanese did not want to cross. Their prime minister, in the eyes of Japanese, might have been lackluster, but he has provided a good and stable leadership at the time when Japanese needed it most, at least looking at it from outside Japan. Those following me and my brother know that we have been very aggressive with Japan. We have been talking about the Japanese stock market for the last 20 months. We've been suggesting Japanese stocks, and these Japanese stocks have done extremely well over the period of time. I guess we have been lucky that we picked the right stocks at the right times. We were also lucky that the EV boom faded and we got the Tesla mania right, and we decided to go with a strategy of the Japanese of hybrid engines. In India, at least, Maruti, Toyota directly and indirectly through Maruti have made hybrid a grand success and have penetrated the market, and the market share of Toyota has gone up remarkably. Even worldwide, Toyota has had a great success with the hybrid strategy. The Japanese believe that the EV in its current state cannot be adopted by everybody and claim to work on a solid state battery. Whether that battery comes through or not is a matter of time. But at this point of time, companies like Toyota have had a second wind. I don't have to talk much about Honda and its performance in the Indian market. If you want to know more about our Japanese stocks, you may message my brother VinodSrinivasan at Instagram, and I'm sure he'll get back to you. Once again, I thank you for your support for Be Rich. Kindly send this video to your friends and relatives and have them take a look. Thank you for supporting Be Rich.